let's look at the performance of some of the greatest investors out there. So first off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we have a bunch of currently living famous investors in this portfolio. So these are various stocks and other securities that are publicly tradable that give you an easy way to benefit from their investing expertise. And we will look at Icahn Enterprises in this video. So you can see that the average performance here from the 52-week low is 57% versus the 44-ish% here from the total world stock market ETF. The top performer is Bill Ackman's Pershing Square. Carl Icahn is currently the least performing, but that can of course create some interesting opportunities. So here is their website. So it's a master limited partnership, a diversified holding company engaged in 7 primary business segments. So investment, energy, automotive, food packaging, metals, real estate, and home fashion. So let's start here by looking at the charts. So this is the very big picture. We can go very far back in time, and you can see that when this stock goes on a rally, it can be very spectacular, and it certainly looks to be very independent of the overall stock market performance. So after the financial crisis, Carl Icahn Enterprises were more or less shuffling sideways. Then we had an explosive almost 300% rally, and then from this high we had an astonishing minus 71%-ish plunge. So this one has been through a lot, clearly. Price has fallen back to a zone that tends to attract buyers. So that is the interesting thing here. We are currently testing a very important moving average. That is the green 50-week moving average. Support, 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 support. So you see that with the blue arrows, it's been support many times, and the pink arrows shows that it has been rather surgical resistance in the past. Hence, quite clearly, for some reason, the 50-week moving average is a big deal. We did recently bounce from support. We are pulling back a bit. The odds do favor that it will offer support again, because we are at a low level. And there's multiple reasons that we will look at soon that support the idea that support likely will come in. Here again on the daily data points, we see the message of a key moving average showing itself in full glory. The red 200-day moving average. Support, 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 support. Then it becomes resistance, resistance, resistance. And the red 200-day moving average becomes now support. So from a risk-reward standpoint, this looks pretty decent. This is an interesting opportunity. We do have some interesting time cycles, rise, decline, rise, decline. And when we compare time cycle with seasonality, we see that June is an okay month, closes higher 45% of the time, usually a 2% gain, but July is significantly stronger. August tend to give us a gain, but only closes higher 47% of the time. When we look at the last 10 years, we see that June tends to be weak, but that also means that June can be a great time to actually buy. Because you want to buy low and sell high. Then July here is one of the strongest months. So definitively, there's some interesting opportunities here on the horizon. Looking here at the time cycles, they have been relatively good here at calling price, projecting some price action. Now the time cycle do suggest that we could have some potentially more weakness in June, which does fit with seasonality. Then again, we do have that very solid support with the 50-week moving average, and we do have the 200-day moving average here. And we also have tons of horizontal support. Beyond that, if you look here at the RSI, we tend to bounce when we get into oversold territory. So, from a risk-reward standpoint, this looks interesting from a more bullish perspective. So here is Finviz. They like to draw the trend lines. We do have some price targets, but they are too old here, so they don't really mean that much. If we go here to SACS, we don't really get much data. For some reason, they do not analyze, at least they do not give style scores for SACS or SACS rank. I mean, for Icahn Enterprises. Market cap is approaching $14 billion US. The dividend is monstrous. Okay, 14.56% dividend. Finviz, they have calculated it at 14.43%. But basically, the dividend is absolutely humongous. So, you now have an interesting opportunity to get Carl Icahn Enterprises after it's been through a very substantial pullback. This is at a low level that has triggered rallies multiple times throughout the history of this stock. The dividend is huge, so you are paid to wait. If you measure from the current level, so even if we were to go down here, this would be a minus 15% pullback from the current level. Even there, the dividend, helps you out a lot. So this looks really interesting. The seasonality was promising. The time cycles also suggested that yes, there could be more downside pressure in June, but July is around the corner. And due to the combination of both weekly and daily data point moving average support, that could certainly limit the downside pressure of the seasonality and the time cycle. So yeah, definitively very, very interesting here. So yeah, taking it all together, it is easier to make a bullish case for Icahn Enterprises than a bearish one. To get access to all the research and the seminars, courses, then you just click here. And that also gives you access to the Excel watch list that you see in the videos. The $19 a month subscription, it is super cheap given what you are getting. When it comes to these kinds of research subscriptions, they range the entire scale, and $19 per month is extremely cheap compared to the type of content you get. There is, of course, one famous investor we can talk about that's received a lot of attention, and that is Cathie Woods. She is rising in the industry, and her flagship fund is this one, the ARKK Innovation, ARKK. So you do see that there's an 87-ish% gain here from the low, minus 30% pullback. But if you compare her fund to the megatrends that I have designed, then you see that the megatrends substantially outperform Cathie Woods. So the average performance of all of these is 202% here from the low. We do have a minus 30% pullback, which is very similar to what she has gone through. So that is something to consider.